Good morning, everyone. Get some jiggles going on here. Guess what were they just saying? I don't know who was talking. Probably another Fed guy. One guy not talking to the other, or they're just trying to rattle the markets a little bit from going higher too fast. Yeah. And jingle, jingle. Holiday songs. Whatever. Whatever. Yeah. New York Fed guy, whatever. I guess them trying to voice their opinion, show who they are. That's was this little drop going on here. So look, we all know this thing's going to pull back at some point. When it's going to happen. To pinpoint the day is foolish. But look, it got a little extended here. The 20 MA caught up to the spiders. It caught up on the Qs. You look here. We talked about that a while back as a guide, and I mentioned at the time, why the 20? Why not the 10 or the 5 or the 6 or the exponential 21? I don't know. It just has a historical thing that it tends to work. It's subjective, but it's a decent guide if you're going to use something subjective like this. So you see it caught up, and we got the red bar ignored, and up, and it went. So I was looking at the Qs. I mean, all-time highs. I mean, it's a bunt. Wouldn't take very much, even though things are, well, down. Well, they're coming right back up off of the low there, um, right on that little minor support. I don't know, little gap there. I don't know what caused that gap, if it's real. Anyway, looking to the left, come down to that low, and it's coming up into resistance, and just inside yesterday's body. Not a big deal. Momentum slowed down. Small candle body. That's how we reach slowing momentum. And just like here, small candle bodies or ranges after moving in a direction. Over here, momentum slows down, starts to pick up. And, as it comes up to this high, many times it exceeds it, greater than 100% retracement. And then it starts to rest again. Pointing out, the beginning of the week, we talked about this correction bar being a historical good indication that prices would go higher after the move up, followed through on the majority of sectors and markets and stocks that formed that pattern. So where do we go from here? Well, quadruple witching. Probably we're going to whip around, not go too far, I would suspect. As we do every day, prior day's low is our first reference point of support. Has it violated that? Yes, not on a closing basis, but intraday or pre-market, it traded under. It looks like I'm eyeballing that. I got my alert down there, which wouldn't go off until market opens. But you can see it right at yesterday's close is that bottom right there where it began to stabilize and moving less than the Qs are. But notice we've got a wide range bar on the weekly chart. Now, where it'll close, we'll see by the end of the day. But we talked about this Wednesday in MT Live. Wide range bar igniting, potentially wide range bar ending. Now, ending doesn't mean big crash. It means the momentum's going to slow down. Look to the left. It's near this resistance. It might pop up and take it out. Let's see how far away it is. Real close. 480, 480-ish, give or take. Might be able to get up there today. Who the hell knows? Look at SPY. Let me take a look at that and see where the big open interest is. The biggest open interest expiring in 2 weeks or next month is 475. There's some expiring today, about half the amount at 480. So I'd keep that in mind. They might push for that on the option expiration. Keep that in mind. Right now it's down at the low. Right, coming off of that a little bit. Go to SPX. This were the quotes last I looked. And 47.60. So, just based on 5-day average range, either of these strikes from yesterday's close are within striking distance. And because prices are down here right now, they'll gap down. If the market was opening right now, they'd be right here. So it would be pretty easy if it was weak, pretty easy to hit the bottom one. If you can get the top one near the open, give or take, I'd say that's a go, since it's down here. And we'll look at the futures just to see if they're still moving down. Again, popping up a little bit, little climo on the 5-minute. If I put it on a 2, you'd have a climactic little buy setup to and look, how many, I don't know. Someone should track how many times in the last 25 plus years I said look to the left, and that thing has to be coined somewhere in Wall Street after all these years. I mean, how consistent can it be? My goodness, without any of the BS to look for the proprietary magical lines right there on those turns. So I was saying from the weekly time frame, we buy the dip. Well, yes. And so how do we determine that and have an open mind? Well, as we look at, depending on what we're looking at, you didn't say what we're going to buy the dip on, but if we're looking at the spiders, or it doesn't matter what we're looking at. Look, this is support. This is major support. The pivot low prior to the higher high. And we could look at this and say, okay, this is a bull advance. It's up here, give or take. I don't know where it'll stop going up, but if it was right there, and I would go that and say, well, come on. What is the percentage distance to that? That would be about a 5% correction. However, that would be deep. Right? That would be a deep correction coming all the way down to major support, which would put the trend in question, which would be, well, would make sense, but could have one more rally that takes out the high. That would be painful to you. Well, we can, kneel down and to the market gods and say a prayer, but we have no idea, how deep it could be. But you can see the distance. Here's the 20 MA. That would, 4.5%, 5% correction in a bull advance, like we saw what was happening in 2021 and prior. 3 to 5% were the corrections. And then it was off and up again. So look, coming all the way down here, where would that lead us? And that we will be talking about that in future pre-markets, and whether it's MT Live or in the green room, of course. But just think about a pullback to here. Ideally, it would, maybe come to here, but it's at the bottom of the wide range bar on this weekly chart. So what would we like to see? This is what we have right now, but let's say into the Christmas holiday toward New Year, this advances further and we get another green bar. Maybe it's not as wide as this one, but we get another green bar where this dips down. I don't know, I'm just whatever, dips down to here and then continues higher to 480. The further you can get from a major support and minor support within an uptrend, the better. So while everybody will say that's extended and it's susceptible to a pullback, would say that's fine because it's not going to violate the trend on the daily time frame. So again, the wide range bar, that doesn't mean it's coming all the way down there now. Someone asked about the internals at the end of the day in the green room. And I said, this popped all the way back up. All the way back up. So these are now, coming back into alignment to say, cautious. and the equity one has stayed up there. And so these are all in alignment. And so now what we talked about in the green was, okay, this is one part of the information, market internals. What does intermarket analysis tell us? And we know interest rates have been the major focus, and it's coming down to our target area. And we got a wide range bar. So on those dovish comments, these interest rates accelerated lower into this support. The dollar collapsed. And this is exactly what I spoke about. I said, in the weekend letter, as to, hey, this looks like it's going to go up. Interest rates look like go down. Things are out of sync here. What would need to happen? This needs to roll back over. And then we see how all of this begins to turn around if that's in the cards, because now they were already thinking it, there'll be rate cuts. But now they're becoming more confident based on Jerry's comments about rate cuts in March. We'll see. Always you got to see how things are going, right? But these coming down, it's basically the market is shooting all of its bullets here into the end of the year. Interest rates dropping down to a support level, the dollar dropping down to a support level. Crude oil has dropped down into a support level and has begun to stabilize here. So as the party rages on, things are lining up for buyers to step up, as they do, as to what's to the left. And if all of these intermarket relationships begin to stabilize and advance with the internals the way they are, the party's going to come to an end in some way, and hopefully it won't be too severe, as we get into next year. And that's what we'll be looking for as this unfolds. So, as for today, it's quadruple witching. We already saw the markets dip down a bit. They're popping up a little bit. There's going to be that indecision. Looking at, what's done fantastic, semiconductors, moving up, but we know FANGs have begun to show signs of distribution. This not participating like it did. Google, there was some news on Google with their AI and not working out so well, I think I read today. But anyway, you can see the topping pattern over here on the weekly chart, but it's been all over the place. Apple still keeps moving along, so there are those things to keep an eye on, and of course we will. Just taking a peek at these futures. Momentum is stalling. Support under the prior bar's low. See if it violates that support under the prior bar's low. And as the ranges contract, violating a prior bar's low becomes a lot easier than if it's a wide range bar. Common sense, especially as it reaches resistance. The Russell is at the top of the range, monster wide range bar. Momentum is stalling, just like everything else, a little climactic. And as it comes up into here, we'll see if it forms some kind of little double top action. Maybe we get a short out of this. We'll see. That's what I'd be looking for. So when it pops so deep off of the low like that, I like to see a little retest pattern or a shock bar where it goes sideways, it pops up and back down again, like we were looking for yesterday. You guys in the green room, of course, we were all looking for this yesterday afternoon at the end of the day. And I was like, okay, we're going to get over here. There was this, the benefit of those on social media. Like this ran up here and it had this, I don't know, whatever you call it. It went up and it went back down. And it was a topping tail and another topping tail. And then a little breakout failure topping tail. And we had our orders under here to short it. And it never triggered. And I was like, okay, done deal. It ain't happening. Buyers in control. Good night. And so now, that retracement, a deep retracement. So things are all over the place here. Things are going to get pushed around by this options expiration a bit. And, we'll just have to, as always, be a little careful. Bitcoin, just to take a peek at that coming back in a little bit, but, consolidating after this whipsaw down. I'll just take a peek at gold because that had a surprising, well, not surprising, came down to support, but I mean, it's bounce. It's just a mess. Silver had it had a gap. If you look at SLV, because it didn't have the gap, it's more impressive as it did. Oh, yeah. You better always be conscious of share sizing because, especially at this point, like you said, fear of missing out kind of thing, and you load up, and then you take a shellacking. That would be quite unfortunate because what'll happen at that point, Robert, is that to save some money after a shellacking, you'd probably be inclined to not renew your subscription to the green room or the advisory letter. And that could be the worst thing. But it happens. Anyway, I'm glad you renewed. Fantastic. And we'll continue doing a great job for everybody in 2024. All yours, Dan.
How you doing? Hello. Good morning. Happy Zero DTE Day. Yeah, I agree with Greg's characterization that the market's using all its bullets here. Like, they had all that intermarket come into play. Powell wore his Christmas outfit on Wednesday. So what's going to drive it higher? Like, seriously, what? I mean, yields continue to fall, I guess. Earnings. What else? I don't know. It's like there's been a lot of good news baked in. So yeah, we've been in management mode, selling things in the strength. We've had a good run here. We got the benefit of that surge. I don't have a single alarm going off pre-market. Let's look at a couple earnings here. Not many. Len. There you go. I mean, I was actually seriously thinking, war stuff. You know, Russia goes away, and you know, good luck on China playing nice, and we've still got Taiwan, which I don't think's going away. Um, all right, so this Lunar stocks that do this into earnings, the people in the green room know. I don't care if this opens up, down, or sideways. Just end of story. I have a bearish bias short the 30-minute low for a day trade and zero DTE call spreads. So this will be, provided it doesn't negate the gap and keep ripping, that's a bearish gap into a wide range ending bar far from the 20. Yeah, but look, all these interest rate sensitive sectors have been ripping. So XHB is at all-time highs. Now I know from a fundamental perspective, everyone keeps saying we're short over 1 million houses. So of course that's helping these companies. But I don't know. I don't know how much higher is it going to go. I have no idea. All right. So Lunar, I have in the middle chart here. Costco, I had a bearish bias based on the close. Now it's gapping over this. So it's a bullish gap over a red bar, but it's far from the 20. So there's nothing to do for a swing. I don't have a bias yet. I got it bottom right. We'll keep an eye on it. Mesa opening flat, big mess. Papel. The heck's a Papel? It's a recent IPO. I don't see any gaps. This is sloppy. It's a sloppy buy setup. $1.72. You know, could be bottoming. That's not something I want to mess with. And X, nasty gap down here, $32. So that's what we call a bear island reversal. It's gapping under this green bar. So all the bulls in this bar are just holding on to an ugly loser. Well, so it looks not very liquid. So we'll come back. DRI, restaurant company, 158. That's a call spread idea. I'll put that in a window. Looks great. DRI, bearish gap. Let's see. I had Shill, I think was earnings. Now, this was a pattern. Had it open flat, that would have been a long over yesterday's high. But now it's another bear island reversal. That's a nasty gap. And then X, I think, had earnings. That was a monster bar on Wednesday. Nothing to do with it. Hershey got a downgrade, and I've been watching this either as a breakdown or see if we get a breakdown failure, and then we start working on the right side for a double bottom. I still need a lot more information. Actually, if it takes out yesterday's high, then I'll be a lot more confident. Then it'll be a red bar ignored. I'll set an alarm at 188. Greg mentioned the strength of the semis, and Bank of America comes out and upgrades MU and AMD. I don't know. I just don't understand those people. They just rarely do it at the time. If they wanted to act like heroes, they should hire us, and they should give us a list of upgrades, downgrades, and say, hey guys, can you just send me a telegram alert when the chart confirms my upgrade? I'll be like, of course. You can either do it on this bar or gap over this red bar, do it on this bar. But doing it now? All right, Sam, I'm watching this to sell out of the money puts. They're illiquid, but Sam, the 320. There's, it's one that you got to play market maker with, put an offer out and see if you get filled. STZ, I have an alarm. This is a nice 1, 2, 3. Wide range bar at resistance. I see it. I'm not blind. But look at all the MAs are flattening out, and then your entry is red bar north. And then you got a void. So that was on my list. Sedger. I hope we get an inside bar for 1, 2, 3 from Monday. PCT, break out of a bottoming pattern. These beautiful bottoming pattern here, these some solar stocks were ripping the last 2 days. A TV, little bull flag here, buy setup. Let's set an alarm at 338. Adobe. That had earnings yesterday. Nothing to do. And there's tan that I mentioned, the solar. Look at the volume. Volume the last 2 days confirmed those two big bars. Triple B. Sam, this was on Sam's list, a big old bull rectangle. So many things had gap and goes yesterday. You gotta, be a little aggressive, but I'm not chasing. Sidna, another bull rectangle. I'll see if it can slop around for a couple days. Alumina. Alex had a great trade on that. CLS. We are still in, and that looks great. J&J. Beautiful range expansion. Reversal bar from a buy setup. That's on my list. Net. It's up 3 bars, but it's a core watch for me. Target maybe 105-ish. It's just the entry was really on Wednesday. All right, now we're selling off a little bit more here, 2 minutes into the open. But yeah, as Greg said, we got quad witching, so we got additions, subtractions to the NAS 100 and S&P 500, so that's going to cause some whipping around too. Duolingo, bull rectangle on the weekly, all-time highs. Yeah, wide range igniting here, wide range igniting here. That's an amazingly strong chart. ISRG was a great trade on Wednesday. Just was a breakout failure as of now. Clack, we had a beautiful. No, we didn't do Clack. We did this one. We did LRCX yesterday. Beautiful 1, 2, 3. Had a beautiful gain. We just took our money yesterday. AVB ripped too much. SUI, these are some REITs that had a good week. DCI ripped. XPH, we are in our ETF trader. Oracle, it's a real company, got whacked on earnings, nothing to do. Look at the kind of the MTOP on the weekly the monthly has room to fall. Oracle's not having a good week. Hasbro, I remember saying on this day it had earnings. I remember saying right here in the green room on YouTube, it was a bigger gap pre-market. And I said, if this can negate the gap, this is a bottoming pattern candidate. And that's exactly what it did. LOW, we had a beautiful 2-day trade on that. The Fed helped us out. Triple N, let's see if it can come back in a controlled manner and give us a reversal. Hershey, I mentioned. HR, rally too much, but another bull rectangle that I mentioned on Tuesday. Look at that. Wednesday. Look, it just rips after the Fed. I read something in some of my newsletters, whatever, that everyone was shocked of how dovish and bullish Powell was, but number two, I